There's a lot of innovation happening, as you know, in how we buy and sell real estate in the digital world and also in the physical world. So we know that crowdfunding had its moment a few years ago and has since evolved. 2 years ago, we had a session at the forum on tokenization, which was at the time still in its infancy. And lately, you've been reading the headlines about NFTs and new types of REITs and other ways to fractionalize commercial real estate ownership in the physical world. So with that, I'm pleased to introduce a longtime center supporter and a friend, Dr. Thomas Wiegelmann, who's managing director at Schroder Real Estate Asset Management. And he's joining us today from Munich with guest experts in London and Oslo. So truly a global discussion. Thomas, thank you for joining us. I'll turn it over to you.
Thank you so much and welcome everyone to this session. We aim to speak about capital evolution and really new models of real estate finance. And I'm very much looking forward and pleased to discuss it with two real experts in the field. We have Richard Croft on the one hand side, he's co-founder and executive chairman of M7 Real Estate. It's a large pan-European investment and asset management specialist in 15 countries, Richard, if I'm right, and with 4 billion euros of assets under management.
15 countries in Europe and also Hong Kong and Dubai.
Excellent. So, and more importantly, you're also non-executive director of the International Property and Security Exchange. So we are looking forward to your really knowledge and experience of the market. And then I'm also very happy to welcome Bjorn Holta. He's really an experienced and knowledgeable fintech specialist. He is head of business development for Digishares. And Digishares' mission is to bring automation and liquidity into the real estate industry. So they provide a white label solution for issuing tokens, security tokens. So I'm very happy to have you here on the panel. And with that, I would like to hand over to you and maybe you would like to briefly, share with us what you do with the firms and specifically also, what motivated you to get into that industry and in this arena specifically. That would be very kind. So Bjorn, would you like to start?
Richard, do you want to start?
I'm happy to. So,
oh, sure. Oh, Richard, go ahead.
My name is Richard Croft. As Thomas kindly said, I'm the chairman and founder of a company called M7 Real Estate. We are now part of Oxford Property Group, which is itself part of OMAS. I'm also a non-executive director of a new stock exchange in London called the International Property Securities Exchange. And the aim of that is to create the tokenization and securitization of single assets across the UK and Europe.
My name is Bjorn Holta. I'm currently in Tokyo, by the way, but I'm usually living in Oslo. So Digishares, we're basically a digital exchange's best friend. We are a security tokenization stack. It could be used for issuance, management, and liquidity of security tokens. My background is from traditional finance. I've been on the capital raising side, in equities, on the institutional side, and also on the asset management side. I got into this security tokenization business because I think it's a second coming of capital raising. So that's why I'm in this game. And tokenization is the killer app for private markets, and so far real estate is the leading use case.
Right. That's it. So thank you for that. So maybe Bjorn, we can follow up on that. So if you could a little bit more elaborate on what's your company's approach towards tokenization, and what are the key advantages you create for different stakeholders in that process.
Yep. So blockchain is, I'm going to generalize, but it's global. But capital market regulations tend to be local. So we try to bridge that gap. So we make sure our platform is agnostic and customizable. So by being protocol agnostic, we mean interoperability is more feasible with emerging liquidity venues around the world. So we want to make it easier and cheaper for real estate players to list their assets around the world. Also, you could use different parts of the capital stack, and that could be represented by different protocols. And that's going to be a huge use case for real estate structured finance.
Right. One interesting question. I mean, we have a lot of discussions around ICOs and now STOs. Would you like to elaborate a little bit about that and also, common misconceptions people may have, when we discuss the tokenization aspect, of the real estate industry? I mean, it's an old-fashioned kind of industry. We are now evolving into kind of, the future with modern concepts. We see some early movers getting into that game, but on the same side, we have a lot of, I think, misconceptions, and it would be great to learn from you, what your insights are on that.
Just me or Richard as well?
I think if we start with you, Bjorn, that would be helpful, and then we move forward.
Okay, so yeah, I mean, I think one of the big misconceptions is that when it comes to tokenization, effectively you're doing securitization, and as such, securities regulations apply, and that's why the regulatory side of that is quite fragmented, and infrastructure around the world is being developed. We're just a bridge. We're just a gateway for that infrastructure that's being around the world. Whether it's digital exchanges, whether it's platform providers, whether it's blockchain consultants, protocol companies, you name it. And I think the main mission for us is really to, how should I put it? It's basically to take away the blockchain aspect from tokenization. When you issue a security token or you manage the security tokens, you shouldn't have the phrase Ethereum, Bitcoin really show up. It really is going to disappear from the front layer in a way. And I think one of the reasons why it's starting to take off is I think it correlates a little bit with the stablecoin phenomena, where the payment rails for crypto to crypto movement of stablecoins is basically going to make it a lot easier to tokenize as well as promote security tokens of real assets like real estate, where the underlying fluctuation is low vol assets in a way. Yeah.
Richard, any views from your side on that?
Well, yeah, I mean, this is sort of, I've been fascinated listening for the last sort of half an hour, 45 minutes about the metaverse versus the real universe. I'm still a proponent of the real universe because we've got to live in it for the time being anyway. And what we've been doing, there's a number of unalienable truths about real estate. The first and foremost of it is it's a very illiquid business. And the whole point of tokenization and or securitization of single assets, what we're trying to do is to take away the issue that's 1,000 years worth of real estate since the Doomsday Book in the UK is being that it takes months and months to do a real estate deal. We're trying to solve that problem. And at the same time, try and deal with the frictional cost of real estate trading. In the UK, it's worse than Europe. I'm not sure what the rules are in America. But we have real estate transfer tax or stamp duty land tax. So each time you buy and sell a building, your frictional costing is 10%, which is crazy. There's no other sector in the world that would tolerate that. If you're 60% geared, you lose 25% of your equity day one to buy a building. But that doesn't make any sense. And it takes 2 or 3 months. So, we think the need for liquidity, securitization, and tokenization of single assets or simple portfolios is huge, because in a world where the real interest rates globally are naught, and in fact, I don't know how many trillions it is of sovereign debt, but I think it's over 20 now, trades at either negative or zero. The need for income is huge, and real estate is still the largest asset class in the world. It's still the best income producing asset class in the world. I know some people disagree with me, but it really is. And therefore, an easy way to invest, a liquid way to invest, a modern way to invest is absolutely essential. So the exchange that we've created, IPSX, which is a regulated investment exchange, so fully regulated by the FCA, is beginning to address those things. We've listed our first single asset building called the Mailbox, which is in Birmingham. Fabulous building, I would say that because we were the sponsor. But we think that is going to become the norm. We also think it's going to be necessary to adopt blockchain technology in the securitization or tokenization of these assets. And I'm very keen to start working with people like Bjorn at how we can actually modernize the entire real estate industry. Because in Britain we've been basically doing the same thing for 1,000 years. It's worked okay, but now we've got to the point where digitization has taken place. It needs to take place, and to be honest, our industry has been very Luddite for a very long time. That time is to change. Now, whether that's a headlong rush into the metaverse, I'm not totally convinced, because it does seem, as I said, you might have heard me see, I can't make up my mind whether that's the South Sea bubble or tulip bulbs playing out again, or whether that really is the future. I mean, I'm going to keep an open mind. But we know, there are a lot of people who thought the South Sea bubble was the thing. All tulip bulbs were indeed the future. They weren't. But the metaverse is a fascinating idea and a fascinating concept.
Absolutely. No, thank you, Richard. I think it's absolutely exciting and a huge opportunity, obviously, really in a first mover situation. So it would be excellent if we could also share some experiences and lessons learned from real life cases. You've referred to the mailbox in Birmingham, which was floated on IPSX. So could you elaborate a bit more on how those single asset listings work, what the process looks like, and what the motivation actually at that stage was, and how you then move through that process, and key learnings. Obviously the question behind it is, what can other investors learn, or other issuers learn from that process? What are key aspects? And then I would also like Bjorn to also elaborate a bit on real life cases in the context of tokenization. So that would be very interesting, Richard.
Okay. So if we deal with the mailbox, first of all, the mailbox is a building worth between 180 and 200 million pounds, sitting in the middle of Birmingham, massive space, about 5 acres. We think with huge growth potential. It has a large number of tenants, actually 57, collection of restaurants, not so exciting, but then also a collection of very strong office tenants, including the BBC. For those of you who know much about Britain or care about Britain, the BBC is the British Broadcasting Corporation, so our state broadcaster. It's their West Midlands headquarters. It's where a very famous radio show, in fact, the longest running soap opera in the world is made, called The Archers, worth Googling later. So this building, very strong cash flow, and I have been obsessed for 30 years about the cost of real estate trading and indeed liquidity. So when I got the opportunity to get involved in IPSX, take a building and list it as a REIT, because the REIT legislation is all about making investing in real estate simple for everybody. So income producing assets, tax transparent, buy and sell shares. Now, that REIT legislation has been very successful in America. It's been less successful in the UK, where a lot of the big REITs on the London Stock Exchange are in fact developers in disguise and sort of very highly priced management. And the investors aren't actually investing directly into real estate. They're investing into management teams that invest in real estate and do whatever they want. I don't think that's what the world needs anymore. And in the UK, we've had the FCA, the Financial Conduct Authority, our equivalent to the SEC, basically shut down open-ended funds because of their lack of transparency. And the amount of people that I talk to that want to invest in commercial real estate is huge. But at the same time, to buy a building worth 180 million pounds, you have to have 180 million pounds. And whilst there are probably some people on this call who might have 180 million pounds, it's still a small subsector of society that has 180 million pounds that they can just go and invest in. But there are lots of people who've got a few $100,000, pounds, euros, whatever. And if they had an exchange where they could take shares in 20 or 30 buildings around the globe that they really liked and build their own property portfolio, and whether that's through tokenization or securitization of single assets, that actually is answering a genuine need. And because, I happen to believe that real assets in a 0% interest rate environment are one of the best cash flow investments. So you can build portfolios that do 5, 6, 7% yields, whatever they happen to be, have a little bit of exposure to London, to Paris, to Birmingham, to New York, wherever it happens to be. That has got to be a very exciting concept. And whether, say, we're going to do this through tokenization, blockchain technology, or using existing infrastructure like the REIT legislation and just shares, I think it's probably going to be a mixture of both. But the need for an exchange that concentrates on real estate, the world's biggest asset class. I mean, all of us, we're sitting in houses, we go to offices, we go to shopping centers. maybe for the next 10 years, but we go to the cinema. Everywhere we go, real estate dominates our world. And yet there is no dedicated exchange for it. I find that extraordinary and wrong. And that's obviously at IPSX what we're trying to fix. But say, whether that comes through tokenization or securitization, I don't yet know. I suspect a mixture of the two.
That's really exciting, Richard, and I fully agree, and I see the huge potential there. And I think many members here in the audience will see that through, and will follow and dig into that much deeper and see the potential here. Can we speak a little bit about real life cases in the tokenization area? I mean, like Bjorn, what have you done recently? What is in the pipeline? What are the challenges here?
Yeah, sure. So I'm going to build upon what Richard has been elaborating. So when it comes to private assets in general, I think they only represent, I think the retail representation is only 4%. With stocks, it's 45%. I think with real estate, technically, maybe it's 7%. I don't have the exact numbers, but I guess the main point is that despite being such a large part of the economy, economic activity, and net worth, private markets are underrepresented. And that's where tokenization comes in, because it makes it cost efficient. And you can get more liquidity for private securities. The main one of the main changes these days is the accredited investor definition has also been liberalized. Like there are mostly tokenizations being done for accredited investors, but the definition is coming down. So it basically means that if you're like a high net worth individual or like a family office, you could easily build a portfolio using an exchange or like a asset management business like Richard's. Or you could build your own crowdfunding platform, let's say, targeting accredited investors. And it's actually quite similar to the alternative investment industry revolution with hedge funds in the late 90s and early 2000s with family offices and high net worth individuals. It's allowing this particular accredited investor class to diversify, particularly into real estate. I'm going to showcase two examples. One is two of our white label users. One is called Red Swan. They're a CRE crowdfunding platform for accredited investors with a pipeline of $3-4 billion of grade A multifamily properties in the US. They have primarily done Reg D and Reg S offerings, and they're taking a two-pronged approach to liquidity. In their case, they're mostly issuing single asset or single property security tokens. But when it comes to international distribution, they're also packaging. They're also doing like a private REIT with, let's say, focus on a Class A or like a portfolio approach. They are teaming up with different exchanges around the world to promote those private REIT fund tokens. It's quite neat because with blockchain and with the security token platform, because there's interoperability. Because the security token protocols are fairly similar, they could be transported to these exchanges and traded on these exchanges. In certain jurisdictions, for example, they have different regulations towards accredited investors, and then you have to use a different protocol. Then all you have to do is issue security tokens in that protocol. So you could have like different classes, like you could have Class A, B, and C shares for that particular fund. And by doing that, you could have global distribution 24/7. So that's quite neat. So that's one example, and then the other one is a place called the Market Space Capital, and they're a private equity real estate firm that is going to use they're going to use T0 to start launching a single real estate token product, and the reason I'm bringing them up is they're like a subset of private equity and real estate, and so it's basically private markets and real estate, the subset, and that's kind of like the core market for security tokenization. And we actually see those type of players coming into the market. They have their own list of accredited investors, and they want to use these different marketplaces, like Richard's, or or in these different time zones. And target that particular customer base. So it's quite neat what's happening. Yeah.
Fascinating. Thank you, Bjorn. One question. I think the benefits we have really covered well. The fractionalization in the market, also more customized investment strategies. Single assets. How do you see like the fund market evolving given the new technologies? I mean, is there any insight already?
Well, can I? Do you mind if I interrupt? And because it's actually not just about you. I think on a beach in Cornwall about 4 weeks ago, the real estate private equity industry that we have known and loved for years and years started dying, if not died. It's going to take a long time for this to play out, but basically worldwide taxation is coming. It is going to be very difficult to mitigate taxes, which is driving a lot of investors towards the REIT regime. I mean, again, one of the reasons, this became apparent, by the way, 4 or 5 years ago in Europe. It's been happening for quite a long time. You're seeing some jurisdictions like the Netherlands and Denmark create withholding taxes if you're domiciled in the wrong jurisdiction, for instance, Jersey, Guernsey, any of the offshore jurisdictions. So we've got to be very realistic about direction of travel. Real estate private equity is changing because tax regimes are changing. And the pandemic has brought that forward because the pandemic, with all the free stimulus that are boosting all of our markets, is going to get paid for, and it's going to get paid for by taxes. People can debate that as much as they like, but over the next 10 years, that is the future. So the REIT regime has a very important role to play because it's tax transparent. The exchanges have a very important role to play, what Bjorn and I are talking about, because and there's a difference between a crowdfunding platform and a recognized investment exchange, which IPSX is. It is a stock exchange. It's got market makers. So we have two-way pricing, electronic pricing. So there's always a bit where we are fired by NASDAQ software, as it were. It is a standard stock exchange, just like New York Stock Exchange with NASDAQ. However, we haven't adopted tokenization yet, albeit it's very much part of it. What Bjorn is talking about and crowdfunding platforms are basically bid offer spread platforms. And they're not quite the same thing because there is an instant pricing. You've got something to sell, somebody will bid for it. But the bid offer on a lot of the crowdfunding platforms tends to be very wide, which is why they haven't been wildly successful. And it's why to date, the single securitization or tokenization of single assets is still a tiny, 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 tiny part of the market because people have yet to create, well, apart from us, we've not been able to publicize ourselves well yet. People have not been able to create a recognized investment exchange, a real exchange with real market makers and real liquidity. Now, we've got one asset on our exchange, so for me to preach about liquidity is a bit not calling the kettle black, but it's coming. We've got a lot of assets we expect to come onto the exchange. And this, we believe, is going to be the way forward. And by the way, to anybody who said, well, how do you list? It's very simple. You just list as a company. No different to any other exchange. The thing that we want to adopt, and say Bjorn and I hopefully will be talking quite a lot over the next few weeks, is how we adopt tokenization. Because again, listing doesn't have to be through securitization. The securitization itself doesn't have to be through shares. It can be through tokenization and through offering shares through blockchain effectively, rather than traditional methods.
Maybe just to add on to that, yeah, and just in terms of liquidity, most of the security tokenization issuances have been towards accredited investors. So in the US, it's been primarily Reg D, and there's a lockup period. So there's a bit of a chicken egg situation where I think the lockup period for Reg D is 12 months and maybe for like Reg A is 6 months. So there's a bit of a time lag here where you're going to see actually a lot more of these security tokens being traded on digital exchanges. And I think, you know, coming over the summer months into next year, a lot of these lockups are ending. So by default, I think the activity, I think in the previous panel, they were talking about there was only like 20 or 30 million dollars of, you know, security tokens being traded. And I think they're referring probably to the Aspen token on T0. But I think if you were to look through 3 to 6 months out, the liquidity picture is a magnitude of difference. But yeah.
Yeah. I would absolutely agree with that. You know, every day liquidity is going to improve as more people get involved in this. Jordan Owen has asked a question, which, if you don't mind, Thomas, I'm going to attempt to answer. So his question is, would a real estate exchange be offered to current landlords? In other words, is there a method for tokenizing assets simply without a complicated restructure? And if so, what is the value to the owner of the real estate exchange? Well, there's two questions. Yeah, I mean, to take IPSX, absolutely. Any landlord can come and talk to us about listing their building, because their building effectively just becomes a company, providing some sufficient size. So it just becomes a REIT, and shares and all tokens are offered into the entity that owns the single building, but they will effectively be shares in a single building. And the value to the owner of the real estate exchange is, of course, the same as owning the New York Stock Exchange, or indeed owning the Nasdaq. We get paid fees for the listing and a tiny, tiny, tiny little sliver of each transaction as it goes through. So the truth is, you know, our exchange is absolutely no different to any other. And whether the exchange, and I keep banging on about this, is just ordinary shares or tokens, all exchanges live and own the same type of coin, which is, you know, a little fee for the transaction and a listing and all tokenization fee.
Can you share a little views on, you know, like geographies and specific products? I mean, what is your experience? What is the target audience typically, you know, for these type of products? What do you see what kind of investment strategies is followed up with, and what are typical sizes?
All right, let's be clear. So somebody's answered another question, which is, what does tokenization provide for liquidity that doesn't exist for publicly traded single asset REITs? Well, there are very few publicly traded. I mean, so the one that I manage, the Mailbox, is a publicly traded single asset REIT. Tokenization doesn't offer anything else, just a different form of record, effectively. So the tokenization is so I'm answering the anonymous attendee question. That's just a different form of record, which what blockchain is rather than shares. But so it's the same thing. It's variations on a theme. If you like, tokenization is the modern method of share dealing, or will effectively become the modern method of share dealing, probably. If we go back to sort of single asset REITs, there are very few of them. To my knowledge, actual single asset REITs, the first one in the world was the Empire State Building, the second one in the world was the Mailbox. And we did the second one. The third one, apparently there's an Amazon building somewhere in the US that has just announced that they intend to list as a single asset REIT. It is not a common phenomenon. And you know, I happen to believe it should be, because you get fixed cost management. You don't end up with wildly overpriced CEOs. And looking at the London Stock Exchange REIT universe is flooded. I know most of them, but with wildly overpriced CEOs who've been paid millions and millions and millions for delivering very, very little performance in an era where there's been a lot of performance. And I think if people can invest directly into real estate, fixed cost management with clearly understandable dividend streams and clearly understandable value, because it's a single asset, that has got to be massively, massively appealing. And by the way, we expect there to be many more buildings other than just the Mailbox on IPSX by the end of the year. So we have quite a massive pipeline of new transactions.
So Richard, I mean, what is really kind of the next step it needs to really thrive? I mean, you know, how is it growing in volume? What are you know, your both kind of experiences and expectations, you know, for the you know, for investors to broadly accept it?
I gave an interview recently, and I described listing the Mailbox as like climbing Everest in your underpants. And what I meant by that, it was very, very difficult. I don't suppose anybody's ever tried to climb Everest in their underpants. Right, there's a weird Dutch guy does that kind of thing. But it would be very cold and very difficult. And Everest without proper climbing equipment probably seems a bit of a challenge. But that's how it felt, because it hadn't really been done before. But the issue really is belief. I haven't spoken to thousands of people that I spoke to about IPSX. Nobody thinks it's a bad idea. But we've been doing the same, the UK, the same thing for 1,000 years since the Doomsday Book, and trying to create innovation. The biggest risk to innovation is inertia. And the real estate market has kind of worked over the last 1,000 years for the majority of people, 200 years in America, etc., 300 years. It's kind of worked. So people are reticent about change. So I would sort of like Christianity, sort of 28 AD. There are a few of us at the moment who really, really believe in this. And we're just trying to get some other people on board saying, look, we think this is quite a good idea. This new monotheism is a good idea. There is just a single God. We need to talk about this. This is how I feel about IPSX. It is a new way of trading real estate. It is addressing the major issues that are faced of liquidity, frictional costing. And I'm just going to tell you about two nothing to do with real estate, but just sort of the world that we live in now. There are two distinct groups of investors. There's people, which I suggest that, Thomas, you look relatively young, but the Baldies of Bjorn and I, we're beginning to think about our pensions. And I'm all about income. I want income. And I want to invest in something that's going to give me a 5% genuine cash flow that I can understand. And real estate does that. But, unlike, like a lot of people, getting into real estate, as I said before, is very tricky. So that's the unalienable truth, number one. There are thousands of people, millions of people who need income generated for their pensions, and millions of us. At the same token, Generation Z and the millennials would trade a tokenized rotting banana as it rotted on your kitchen table, if they could. Honestly, they would trade anything. Watching my son on his trading apps, he's 18, he would trade anything. Literally, it's in his mind. And most of that generation, well, I call it the Robin Hood generation, feel the same way. So if you could then create tokenized buildings, securitized buildings, which allow people to participate, whether it be our generation just wanting to hold it for the income, or the younger generations who literally would trade this rotting banana if they could, you are then addressing massive market need. Bjorn understands this is why he got involved in the first place. And, whether IPSX is the exchange that is going to lead this or whether we're too early, I don't yet know. Because, change takes time. But, the last session convinced me that there I was thinking that I was relatively modern in my thinking, listening to the metaverse. I realized I'm probably as Luddite as everybody else. So maybe change is happening so fast that we are in the right place at the right time. But there is no doubt in my mind at all that IPS and securitization, tokenization, building is necessary.
Thank you, Richard. That's super passionate, and I'm a true believer, really, like in the benefits and how it will evolve. Bjorn, do you have any further insights? What does it take, to make this model really thrive? To get this innovation into capital markets, into investors' minds.
Yeah. So I'll just focus on empirical observation of our clients' activities and inbound inquiries. I would say, so far it's been a lot of, I guess, people trying to set up crowdfunding platforms using tokenization, and there's a little bit of arbitrage involved where they're trying to, they see this as a cheap way to do a private placement, avoiding a long form prospectus. Now that phase is kind of ending. You're getting more developers and real estate asset managers looking to do POCs, like a proof of concept with something in their portfolio, typically something that is multifamily, or like a build to let, where they could showcase a decent yield and a high class property, and I think the market kind of is in this phase right now where they're trying to suss out how much capacity the market can take. When it comes to sussing out how much market capacity they could take, they usually want to combine it with the digital exchange listing. So what the typical type of inquiry we're having is, the largest player in our industry is like Securitize. We're in the top 3 for real estate. Typically, they'll use our white label platform. We'll do the issuance. We'll do the management of the cap table. We'll set up all the fintech payment rails and do all the customizations. And then when it comes to the trading, it will usually be done on a digital exchange. Whether it's a centralized exchange or a DEX in the future, there probably has to be some sort of KYC AML layer. They have to feel comfortable with that. And then stepping from the real estate developers to the real estate or to the asset management industry, they have kind of maybe more of a technical issue. When it comes to investing in private assets, they need a custodian. So when you're transferring, let's say, selling a private security from one institution to the other institution, you need a custodian, and that part of it has been lacking up to the point where you've had tokenization. So tokenization in a way is going to allow institutional investors or asset managers to invest more in the private asset markets because of that functionality, because of the digital aspect. So yeah, I think that part is coming. And another part I think that's quite apparent is tokenization's also looking to disrupt the monthly liquidity, private equity type of vehicles. These like CCAV markets, like in Luxembourg, or like UCITS. So semi-liquid instruments. That part is slowly going to, maybe you're going to see more activity on digital exchanges, for example. Yeah.
Thank you so much. I think that's really insightful, Steve. I would like to hand over to you with a big thank you to Richard and Bjorn.
Excellent. Thank you. So good to see you. A fascinating conversation, and I think a good lead-in from the prior session on the metaverse. So we've got all of this going on with tokenization and fractional and the virtual versus the physical. I think it's going to be certainly an exciting and maybe challenging future for real estate. Did we get a chance? I was listening in, but also multitasking a little bit. Did we get a chance to discuss the kind of regulatory challenges from country to country and whether certain countries are going to adopt more quickly than others?
Well, I mean, our exchange is a regulated exchange, so the FCA is very keen. Financial Conduct Authority is very keen that most real estate trading is regulated. So obviously, I think there is going to be a headlong rush to regulate the activities that I've discussed, tokenization and securitization, because at the moment, the crypto world, I'm going to describe the crypto world, is still a bit Wild West. And I think that frightens regulators. And if you're going to take real assets and drop them into the new world, I think regulation is going to come very, very quickly.
Right. Yeah, the comment earlier was about it still being a bit of a wild West. Bjorn?
Yeah, I mean, I think the technical solution is already there, but as you said, it's the regulatory issues. So it's like KYC, AML, and transporting that information and being able to reconcile that information, and platforms like ourselves actually play that role, where we will do that on the behalf of the issuer. So making sure that that KYC AML information is transportable to the digital exchange, or to a different protocol. It's like bridging the gap in a way.
Mm-hmm.
that's definitely taking place as over the course of the next years, where you see digital exchanges at almost every time zone.
Right.
Yeah.
Right. So we end up with a global exchange eventually, right? Or maybe not.
No, I'm not sure. No, because they'll all remain, well, for at least for the time being, they'll all remain independent.
Right. Right. Well, thank you very much for the conversation and for joining us from I guess Tokyo, London, and Munich, and I'm here in Boston. So this might get the prize for the most international of our discussions today. So I certainly appreciate all of you participating and joining us virtually at MIT, and hope to have all of you here physically at MIT in the very near future. So we appreciate it. Thank you.
Thank you.